investors. Welcome to Proximo, the Value Stock Analyzer. Today is December 27th, 2022. Merry Christmas and Happy Holidays. For this week's analysis, we are judging our friends and family's social digital interactions, judging hard, and measuring ourselves against them. How come I'm not as successful as Keith? Or why isn't my family as happy as theirs? Well, let me be the first to tell you that family is actually miserable and Keith is a douchebag. Today we're looking at Meta, aka Facebook, aka the multi-metaverse or some Don't forget to like and subscribe. Your support will help us continue making content for you. And please check out Proximo.com to see this analysis for yourself. Facebook. That thing that was super cool and exclusive in 2004. You had to be in college and your college had to be invited in. You could connect to other cool people, stalk a crush. Life was great. Then just a short time later, it opened up to the world. And a shorter time later, your parents signed up and it was getting less cool by the day. By 2010, Facebook had 500 million users, and then in 2012, they had 1 billion users. It's by far the fastest growing and most successful social media company ever. With that fast growing success comes a lot of growing pain though, and not from competition, from themselves. The biggest controversy facing Facebook historically has been customer data. What does Facebook do with all this rich information about all of us that use its platform? Well, they sell it. Don't worry, not for evil. Just kidding, of course for evil. Where do we begin? Facebook was caught using data from private messages, something they claimed not to do, but actually did, and this was made public by a third party in 2013. Millions of users have had posts made public without any regard to actual privacy settings. This was due to bugs in Facebook itself. If you take them at their word here, maybe this is more incompetent than evil, but that would mean trusting Facebook. In 2021, the Equal Employment Opportunity Commission filed suit against Facebook for discriminating against black candidates. There's lots of other complaints, and it gets complicated because of the First Amendment. Can Facebook be held liable for its users' spread of fake news and conspiracy theories on its platform? That's a tough one. Selling ad space to those spreading fake news is more culpable in my opinion, and they do that too. Finally, and I've been saving the best for last, and perhaps already very well known, Facebook sold 87 million profiles worth of data to Cambridge Analytica. The data of these users was kinda made available via a backdoor in Facebook's API, which Facebook was not very happy or willing to admit at the time. And it even threatened a lawsuit to those that broke the story. This data was used by political parties, most notably Republican candidates like Donald Trump and Ted Cruz in 2016 to spread negative information about their rival candidates, using very specific targeting to make sure the right audience saw the ads. As to the efficacy of this tactic, that's still up for debate. We may never really know. What we do know was that the targeting was evil since the data was collected wrongfully, and the FTC is still determining the size of the fine, which will be in the multiple of billions of dollars most likely. Just recently, they settled a suit with users for $750 million. That's a lot of controversy. Now, before we get into the numbers, one more thing we need to discuss: the metaverse. What is the metaverse, you ask? No one really knows. Right now, it looks like Coursera and a VR headset, the MetaQuest, the formerly Oculus headset. It sounds neat, I guess, but they're pouring billions and billions of dollars into this program. They are quite literally betting their future on the metaverse at this point, and there's nothing of it to speak of yet. Let's see if there's anything redeemable in the numbers. Meta is currently trading at $118.04, up from a low of $88.91 in November, and down from a high 52 weeks ago of $346.18. Facebook stock is down over 65% for the year. All tech stocks are down. Meta is down more though. Some quick fundamentals. They currently have positive earnings with an earnings per share of $10.33. This gives us a price to earnings ratio of 11.43. Remember, thinking about PE, would you invest $11.43 for every $1 that Meta earns? Market cap is $266 billion. This is an important one to remember. Coming down to revenue trends, for their last fiscal year, they reported $117 billion in revenue, and their average revenue growth is pretty healthy with a 3-year average revenue growth of 28% and 5 years at nearly 34%. Relative to their market cap, Meta pulls in a lot of revenue. Their current market cap is less than 3 years of revenue from Meta, which feels like value in my opinion. Revenue is nothing without profit though, so let's take a look at those earnings. And earnings are impressive too. Almost $40 billion last year, which is 35% more than the year before. Their 3-year average earnings growth is 25%. Now, both revenue and earnings are very likely going to be down when they report the yearly numbers in just a couple of weeks. Looking at the first 3 quarters of revenue, Meta has reported $84.44 billion for the first 3 quarters, which means they need $33 billion in Q4 just to match last year's revenue. It's not impossible, but the previous 3 quarters suggest it will be difficult. The revenue miss would be okay by itself, but earnings are actually worse. For the first 3 quarters of this year, Meta has reported $22 billion in earnings, which is a big drop compared to last year. Even if they had a record earnings quarter in Q4 of $12 billion, they would still fall short of last year's earnings. These types of earnings suggest they're investing in something new, which we know they are, the metaverse. But our lack of confidence in the metaverse has us a little suspicious. I may not be buying the metaverse, but you know who is? Institutions. Institutional ownership has jumped from about 1.5% last year to nearly 60% as of the last quarter. They are clearly loving the drop in stock price, or they know something that we don't about the metaverse. Notable metrics on the scorecard: liabilities over assets is low at 0.25. Meta does not carry a lot of debt. So while they are making big investments, they are able to fund them from revenue, which is a positive thing. 5 years of increasing revenue is true, though this is likely to turn false after this year unless they blow it out in Q4. Market cap over enterprise value is very low at 0.31. We say a value of 1 would be a fairly priced company, over 1 would mean overpriced, and under 1 would mean underpriced. At 0.31, Meta is very low. Looking at their enterprise value trend, it looks really strong. Cash, on the other hand, is trending in the wrong direction. Between the end of their fiscal year last year and Q3 of this year, cash on hand has declined from $47.9 billion to $41.7 billion. That means they're burning about $2 billion every 3 months from their cash pile on top of incoming earnings, which is also being burned on the metaverse. And we still don't know what that is, by the way. How would we summarize Meta? Personally, I think they're undervalued compared to current revenue and current earnings. With those numbers, they could easily be a $500 billion company. I mean, $40 billion in earnings and a market cap of $266 billion is crazy. The market cap should be way higher. It's not higher though because the stock price has dropped, and it's dropped because of the insane investments in the metaverse. Speaking of the metaverse, there's a couple of outcomes I see here. First, they drop the metaverse investment and start printing profits again. Profits are declining because Facebook usage is down, and it's likely to continue dropping because fewer and fewer people seem to be engaging in Facebook like they used to. Tech companies age in dog years, and Facebook is a really good example of that. But if they drop the metaverse, they still have a lot of strong earnings years ahead of them, and the stock will be even more valuable than it is today. Our second potential outcome is the metaverse is a smash hit, in which case they print even more profits, and it could lift the Facebook slump too. This is the best case scenario. And then option 3, they continue to invest in the metaverse and it drains them. They'll need to eventually raise more money, probably sell more stock, which will dilute their shares, and the stock will drop even more. This continues until they need more money or a loan, or maybe they need to just get acquired. Maybe Elon can rescue them too. Outcome 1 and 2 isn't bad from an investor's perspective. 3 could be a disaster depending on how much cash they burn. If I had to summarize quickly, they're a really good value right now with the potential to stay or grow even more valuable. But it really all rides on how far they take this current investment. That's it for today. Please like and subscribe if you found this helpful. And if you really want to support the channel, go to Prosimo.com and subscribe to our monthly service to see analysis like this for yourself for only $5 a month. And if you have a stock you'd like to see featured next week, please comment below. Thank you. Happy investing. Go find some value.